Hello traders, welcome to my channel. Today's video we are going to be talking on something very important, which is market structure. Right, so market structure, in this situation we want to be looking at various aspects of market structure, also knowing when the trend of the market can actually change, so that we can be moving from either a downtrending market to an uptrending market or vice versa. So this can actually help you catch very big moves in the market. You can be able to forecast the market turn right from the beginning and start riding the market right down, and you'll be able to catch very massive moves because you are able to identify that the market or the trend of the market have shifted from an uptrend to a downtrending market. But first of all, we need to do a detailed demonstration on what market structure is all about and then how price changes. So you want to watch this video till the end, right? So okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Not talk about market structure without identifying the three forms of market structure. We have an uptrending market, we have a downtrending market, we have ranging market. So an uptrending market is a market structure that creates series of higher highs and higher lows, right? This is an example of an uptrending market. So you see price candlestick formations that turn up, forming this, and there are situations where price will usually tend to switch from this uptrending market to a downtrending market. You start seeing price creating series of lower lows and lower highs, right? Lower lows and lower highs. Okay, so basically here we want to be looking for sales, we want to be looking for buys around here. But we have ranging markets. You see market structures where price is neither going up or coming down, so price will generally be ranging. But we want to be looking at trending market because that is our focus. That's how we usually ride very big trends, catch very good moves in the market. So basically this is Euro Japanese yen as well. Okay, if you look at it from at the left hand side here, you're going to identify we had an uptrending market, isn't it? We had price creating higher series of higher highs and higher lows, right? And then all of a sudden recently price just switched from an uptrend to a downtrend. Now how are you able to identify this? Now if you want to judge market structure accurately or properly, you need to first of all understand that this move right during a trending market is usually named an impulsive move, and then we have a pullback. Price usually create impulsive move and pullback. Now if you look at this impulsive move and pullback, it creates what we call swing highs and lows. These are swing highs, these are swing lows, swing highs. So here this is what we call a lower low, a higher low. We have this to be a higher high. Okay, so if price leaves this zone here, we have this to be higher high. Okay, if price pulls back, we have higher low. So here we have a higher low and a higher high. Okay, so basically if price creates a high like that and then pulls back, right, we have this to be an impulsive move. Now if you want to catch very good trading opportunities, always try to identify strategies that has to do with price pulling back, because once price pulls back, right, next move will be an impulsive move, and this impulsive move usually tend to give you more pips, right? You don't want to be entering markets where market is up here, or market has already started an impulsive move, because you don't know when the impulsive move is completely out. That's why you see sometimes we identify demand and supply zones, which are usually at the lows like this, that usually catapult all of these strong moves, right? And price will usually turn sometimes to pull back to this zone, and then we have the next moves, and then we are able to catch that, right? But now we want to look at knowing when the trend of the market actually changes, right? We want to know when the trend of the market actually changes. Okay, and how you can identify that. Now you see that for a market structure to continue creating, being considered an uptrend or a downtrend, the previous high has to continue being created. Like, it does not need to be violated. Here, if price creates a high, it comes back, it creates the next high, it comes back, it creates the next high. Price has to continue creating new highs without violating the previous lows, because here, as you can see, we have this to be a previous low, right? Remember guys, this strategy, this is an in-depth understanding I want you to understand on market structure, because if you are a demand and supply trader, if you are a trend line trader, if you trade any strategy, it's important for you to know market structure because it is applicable to all strategies. So you need to understand the market structure so that you should avoid buying when the market has switched to a downtrend, or you are selling when the market has switched to an uptrend. You get the point? So right now, you see, now these are what we call the higher lows, right? We higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So for price to continue this uptrend, price has to keep on creating new highs and do not need to come back and break this low. As soon as you see price comes back and close below this low, we start thinking that the trend of the market is about to change. But now when you see that price keep on creating higher highs, you can use multiple strategies. You can even use your trend lines, right? You can use your trend lines. You connect like that. Okay, when you connect with your trend line, you are probably going to see that sometimes price will come back, retest in zones where you'll be looking to be buying, taking your buy trades. You can consider demand and supply. You can be trading based on demand and supply as price pulls back and all of that, or you can be waiting for price to actually break out of these highs rare. Okay, we have a strategy. You can still build a strategy where you consider that, okay, as price breaks out of here, you take your buy trade and all of that. But now you are staying with the structure of the market. Right now, you see that here price created this low here, isn't it? So this was a lower low and then created a new high. But what happened this time around? We had structure violated, what we usually call break of structure. So here now you start thinking that, okay, if I was considering buying, I'm going to stop and think for a while, right? Except it turns out to be a liquidity grab or a first breakout scenario. We have to wait first of all. Once you see this candlestick close below here, all right, now if you see the body of a candlestick close below a zone like this is what we call a breakout. Note that if this candlestick actually came down but went up and closed above the zone, leaving only the wick below the zone, we will not have considered this to be a breakout. But as soon as you see the body of the candle close below the zone, we want to be considering it a breakout. But this time we don't conclude that the trend has changed, because sometimes it could be just a liquidity grab scenario and sometimes price will close again above the zone and continue going high, right? But this time around we only have to wait, stop from buying and pause for a while, right? So now we wait for price. Okay, there are situations where price can break below the zone. When price breaks below the zone, some people will identify this the supply zone that was above here, right, and mark it out. Let's say this candlestick here, okay, and then mark it out and then wait for price to come and reject here. They will be shorting, okay, and then they want to be moving, catching that move, and then expecting that they have just caught the market at the beginning of the trend, so they can really catch a very big move, right? And then you to see what the market will turn out to give. Okay, so right, you can see that that's how some people will trade. But I will wait for further confirmation. Sometimes you can still wait for further confirmation, because if price close like that, now what you do now is you identify this other low here. Okay, this time around you consider this to be a new low that has been created, and then you wait for price to come back and break through this low. You get the point? So when price goes now up and then comes back again and breaks below this low here, and then here I will consider that the trend have actually switched from an uptrend to a downtrending market, right? So this is it. Here you see now that price finally comes and breaks below this zone here. When price breaks below this zone here, now we can consider what a downtrending market. So we consider now that the trend of the market has changed. So what I do now is I identify my supply zones. You can see this is a supply zone. You can see this big body candlestick with this wick. It has left behind this imbalance, so I'll be expecting price to pull back. When price pull back, I'm going to be taking my sell trades here. If you are trading based on demand and supply, or if you are also trading based on trend lines, right, you can now start identifying, drawing out your trend lines like that, and then you are expecting that price should pull back to these zones here, and then you can also be entering, right? So any strategy has the way you can consider it, right? So you can expect that as price pull back here, you'll be entering based on your trend line, because you already know what you have seen in the bigger time frame. You consider that the trend of the market has changed. From here you can now start getting very big moves, right, as price move, because you are trading with the trend of the market. While in the smaller time frame, I will usually scalp, right? I can still catch scalping opportunities like here. I wait for price to come and move down and all of that. So we can see we have a similar scenario on Euro Japanese yen. Okay, we had this previous low that led to this high. what happened? Price consolidated for a while, created a high came, and some people interpret this to be double top, right? Some people call this to be double top, and they will just consider that, okay, as price moves like this, right, they'll consider it to be double top or triple top, whatever, and then they wait for price to break out here. They'll consider this to be neckline, and they'll start shorting from here, right, shorting from here, and then catching very big moves when the market just start. But okay, for me, I'll look for other scalping scenarios. Like now, like I said earlier, you can use many other aspects. So you can consider your trend lines. Maybe you connect like this if you are using a trend line strategy, because you already see from here that price has already started creating series of lower lows. So you can see it clearer in the smaller time frame. From the 15 minutes, you can scalp, right? You can scalp from here. You see from here price, you wait for price to come, or you identify, you sketch out, you wait for price to come and reject, and then you are selling, because you already know that the trend of the market has changed. So that is how important understanding market structure is. All right, so if you found the video helpful, please give me a thumbs up. Make sure you subscribe to the channel if this is your first time coming across, and also make sure you click on the like button so that this video can also be shared to other people by YouTube. And also see you in the next video.